The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman on this December the 12th. 12. Isn't that something? 12. We haven't seen that for a while, and you know what? I don't think we're going to see it for a while. Yeah, 12. Have to wait to, 21? No, 12. Yeah, 2112, I guess. Well, 100 years. Wonder where the market will be in 100 years' time. All right, it'll still be around, just maybe a different form. Dow's up 11, S&P's up $1.95, comp index is up 34 at 3,021. We've got gold up about 3 at 1712, just kind of chugging along with lower highs, lower lows for at least this period. The silver's up 12 cents at 33. Got copper trying to bounce it up 10 cents at 368. Crude oil is at 86.34. But bonds are down just 6:30 seconds. Now, this is going to be interesting. Let me do this. I'm going to get out of it. And thank you, Steve, for 2 great hours. You know, here at TFNN, we try to give you everything we've got. We just do our very best to be able to give you information that we've developed and built up over the years. And actually, within that context, let me just quickly get this out the way, because I'd like to talk about it, but I don't want to take too much time, other than to say, go to the front page of TFNN. If you are just getting the feel for the ChapmanWave, or if you've been watching me for a long time, you've been nodding your head to say, there's that 300th peak D that we've seen in the last month, whatever it is. 4 higher peaks. I look for the lowest low bar. In this case, I've got the E-minis right here. You look at the low bar on the daily, it went from 1333.75, and that was on November the 16th, I believe it was. November the 16th, and merely goes to peak A at 1400.50. This is the E-minis. This is the March contract. On the 23rd, pulls back, goes to 1417. 1417 on the 3rd. That's B, peak B, because there was a lower peak after that, a lower high bar after that. And the moment it took out 1417 by going to 14.17.25, that started leg C up, and that's where we are. In the ChapmanWave, theoretically, what we need to do is to look at all the technicals, that, at least my technicals, the MACD and stochastic, and 9-period moving average, just different chart patterns, and assess where we are, and say, okay, a move like this invariably should see at least a peak D. Well, this is the future. So then let's go and say, okay, well, that's not the core. The root of that is the SPX. And the SPX is in leg deep, maybe making a peak D if there's no new high bar today above 1434.27. But now this is a technique. Now, on the front page of TFN, you'll see an ad. It says, save $125 on introducing the ChapmanWave methodology. It's my CD. Plus get a free month of the opening call, 128 value. Turns out that I'm giving you $4. I mean, you're talking about bargains? How about that? I didn't realize that at the time until yesterday. I was doing the arithmetic. I said, hey, whoa. It doesn't matter. I've had so many requests, and actually, they've been, just since the announcement yesterday, they're selling so well that I'm going to have to ship a whole new batch down to a TFNN. So please take advantage of this. Not only do you get the CD introducing the ChapmanWave methodology, the one that I refer to all the time here. These are patterns that repeat that V-shaped pattern. Well, look at this. There's a pattern here that I call, I start off with the cup formation, but the V-shaped formation has exactly the same constituents. It basically has the same, it's a context of how things are formed. Where is that? There. So you go from the left side to the right side. That's not good enough. I talk about that just in terms of the waveform. But in the formations that produce these repeating over and over, these patterns of the V or the inverted V or the cup or the inverted cup, which is the arch formation, if you just learn about those, and then those occasions where you get a straight line move. What if the Fed turns around, does something today, and the market goes straight down 150 points, or straight up 150 points? That's a straight line move. And you want to be able to learn how to utilize that. And in this particular context, there's the pattern. It's called cup symmetry, mirror image, left side, right side. The V-shaped pattern has the same thing. I happen to think that V-shaped patterns have the potential to have a sharper move when they break out from the left side lip on the why? Because when you're making a cup formation, you are slowly moving to the right as you're making lower lows and probably lower highs as well. When you make a V-shaped pattern, although you're making lower highs and lower lows, you're not taking the time to move to the right because you're going like the S&P chart I was showing you a moment ago. Like on the way down, it was just a straight move. Trough B, trough C, boom, and you went to the low. I should have typed that in. The low of 1343.35. 1343 point. I like to put the points in. 45. And I'll turn that into a green. Yep, green. And now you've come back. But wait a minute. I had shown this chart earlier, both in the Dow and the S&P, that there was an ugly candle that we were looking at resistance from the 7th. But basically, I have drawn, and I teach how to draw these lines in my CD introducing ChapmanWave methodology. As you can look how thorough this is. Just look how thorough that is. Look how I explain it. Look how I draw it in. I describe it in the 90 degrees. It even took 5 years for this gold chart to turn from the 547-ish area, plunging all the way down to the $300 area low, 285 I think it was, and then to make a right side move to the upside, and yet it was exactly 5 years down and 5 years up. I mean, that's 1991 to 2005, 5 plus 5. So it's showing you the patterns that form consistently, just over and over again. Well, that says that the left side, right side price time match, another technique that I choose, it's a time-related one with a plumb line. In this case, it turns out perfectly to be the plumb line right there in the middle on the 16th of November. And it goes where? To within 1 day. The high that we were looking at was 1434.27, and yesterday it went to 1434.27. I mean, can you get more exact than that? Actually, it is more than exact, because 1433.74 was kind of the high that I was looking at. That was the bar. So it got it exactly, but it really missed a key left side start of this horizontal line by just a few cents. Big deal. Most importantly, how does it handle leg D? Because in the ChapmanWave methodology, when you get to a D, yes, you can go higher. Yes, you can go higher, just like the Dow has gone higher. It went to 13,306, a tad above the 13,290 previous high that I was using. And the left side bar, the barrier that Grand Canyon face cliff that it bumped up against on the 23rd of October. That's the line that I was using. And in this particular case, we're using the 16th as a what I call a plumb line, the midpoint line. And yesterday it hit it exactly to the day, the left side, right side price time match. Now today there's a slightly higher high, so that could be peak E if we pull back from here. Well, it turns out this pattern repeats over and over. This is not the one I wanted. This is the one I wanted. Not that one. I wanted, if I can find it, right. Not the 5 minute, but the 120 minute, which should be, oh my goodness. Come on, everybody, here we go. I'm looking to see. Oh, there it is. Oh, that is the 120-minute bar right there. Peak F is a possibility now, also with a left side, right side time price match in the arch formation. Actually, it almost hit it yesterday, and today it's extended higher. Was that today, this morning? The level yesterday, it's extended high to 13,305. So you can see that that maroon purple line there is a 9-period moving average, and the 13,076 is the very strong resistance, now support area, that if there is a sudden pullback, I'm not expecting more than 180 to 250, maybe 280 points over the next few days if there is a pullback. And then, based on the other techniques I'm using, by looking at the NYA.X, I'm looking at the New York Stock Exchange as possibly in leg C here, wanting to test its left side high of the 18th of October at 84.17. Right now it's at 83.87. So these are all together. They put, and this pattern here that I call the falling axe in the CD introducing the ChapmanWave methodology. The falling axe is, that's chapter 24 out of 27. Chapter 24, we'll go right there and I'll tell you what it is. Chapter 24, right there. And what you're looking at here is the pattern of the breakout. So all of these things are discussed. So the CD is half price. It is going for, it's usually 249. It's going for 124. Save $125. My opening call is $128 a month. You get that free. Whoops, I just threw it in. Why? I want to see, I want you to learn it, and every day I explain exactly. I show the charts. I show the price movement. I explain it. I go into all these details of the 120-minute Dow, the 120-minute VIX, the short-term trading index, of which I've developed my own what can I call it, a strategy, whereby there's a certain price point on the upside or the downside that tells me it's got a success rate. I don't have the time. I don't even care about going back. I'm just telling you that it's missed maybe once or twice in the last year. It's got about a 95 to 96. It's probably higher, but 95 to 6% accuracy rate. There's one particular index going back, I'd say 2.5, 3 years. Because the last time I checked it out, it was right up there in the mid 90s, and I think it's only failed maybe once or twice since then. Failed meaning that what it was projected to do, it did not do in the time that it was supposed to do it in. Case closed. It either does or it doesn't. So, and then here is the Dow daily and the S&P. The S&P did go to that requisite peak D. Remember I said peak D is what you want to see? It's gone to leg D and maybe peak D today. Then I show this chart and I give a big explanation, the rising wedge formation, the potential still for a cup, an arch formation to form if the Dow breaks under 13,000 at any point in the next 3 to 5 or 7 sessions. That's a possibility. So I explained that. Very detailed report, and we've had some really good success in the picks that we've had in our in the positions that we've had. And so I hope you think of taking it. You're getting it. I'm paying you $4 to take it. That's basically the way to look at it. We'll be back. We've got Mike in New York, and I want to take your calls at 877-927-6648. Basil Chapman, Tiger Technicians Hour. Dow's up 19, S&P's up 2.86. Is this going to turn into a ChapmanWave stalk leg formation? I discussed that yesterday. Well, we don't know yet, but boy, it's acting that way. We'll be back straight off these messages.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, and my pleasure to be here at 11 o'clock till noon, Monday, Tuesday, Wednesday, Thursday, Friday. Make sure you go to the front page, check out, I've got the special coming up, but it's a special upon a special upon a special. What does that mean? It means that we've got these Tiger Dollars that there are certain price points that you can go $500 or $1,000. Whatever it is that you choose to do, you will get a bonus. You'll get a 25% discount on your next using your Tiger Dollars for whatever it is you want to use. That's number one. So it increases your buying power by 25%. Hey, not only that, you get a discount, you get a tax write-off because you are going to get a tax deduction on a part of your Tiger Dollars, because the Salvation Army will get between 5 and 10% in your name. It goes to you. It's TFNN does all the work. You will receive a notification from the Salvation Army to say thank you for your gift, and then you'll be able to deduct that. So this is just a win all the way around. So please check it out. Now we're going to go to our first caller. We've got Mike in New York.
How you doing?
I'm doing well. I'm going to do this one real quickly because we've got a caller who's waiting and he has to go. But do you want to look at?
Yeah. First, in today's newsletter, SPY is in leg D, not C.
Oh, did I say C? I meant the okay. Whoops. Of course it is ABC. Yeah, I just mentioned that. Okay, thank you. I'll correct that. Thank you very much for pointing it out. So you want to look at diode
DIOD, the daily looks very strong. The weekly and monthly look very weak. I'm short a little bit of this. I wanted to get your opinion on whether
I would not be short diode, and I'll explain right at this moment, and I'll explain why. There are a couple of stocks, certainly the older crowd, and I'm looking at them and I'm saying, wow, what's going on here? That have just, in the last couple of days, even a DuPont, who's just shown a sudden burst of energy. I would let this burst of energy just play itself out a little bit. I know what you're looking at, and the week now, what's beautiful about this chart, I'm actually going to talk about it a little later, because it's got all these different ChapmanWave methodology techniques in it. I might even just quickly change it and make it a white chart so that people might want to print it out. But I'd be a little careful, because if you look at the doji candle of the monthly, it held the 200-period moving average. If it closes above this doji high, it could go a little higher. That's above 1609 right now. DIOD is at 16.35. Hey, the week is only halfway through, so we can't even talk about the weekly chart, although it is in a strong leg A. Price-wise, the technicals are improving. If I was to look at this as a buy signal going to a buy mode, it's in the buy signal. I haven't yet got the pullback, and then a leg B up to make it a buy mode, saying that it should go to at least D. So this could turn into an A failure, a leg A, single leg A failure. But if you look at the weekly chart, the stochastics at 97%, the MACD's still good. I'm going to hold off. And the whole semiconductor area, there are some stocks that have come back really well, and there are some stocks that are looking very poor. This has had terrible action, but the fact that it's pushed above the candle of the 1st of November, around number 15 low and 1609 high, says to me, don't short it yet. But you know what I'm going to do? I'm going to put it on my list, and I'll follow it. If this is peak, if it makes, let's see, high today, 60, it's made a new high, so it's still in leg C. I would, even though at this point you can expect a leg C failure because it's just a retracement, the technicals and everything say no, it's going with the market. I would wait for a leg D. If we don't get it, you'll have a great shorting opportunity, because if it takes out 15, it's going to make the upside very limited. I would have a little patience. And if it really succeeds in rallying, this could even get to 18.24 if the general market is able to hold through the next week or so of December. So hold off. Don't do anything. I've got my eye on a couple of stocks. This is one that I'm going to actually now put on the list as potentials for rally failures, because 1784 is the 9-period moving average on the monthly. So we know now exactly the price points that it could get to, and what happens if it doesn't get there and turn around. So thanks for bringing it to my attention, Mike, but I would not short it yet.
Okay, good advice. Thank you.
Thank you very much. Let's go to Joe in Fort Collins. Hi, Joe. How are you doing?
I'm doing well, sir, and yourself?
I'm doing well, thank you.
I appreciate your expediency, and I'm dealing with my 1-year-old grandson here and you at the same time. And
all right. Well, your grandson has to get preference.
Basil.
Your grandson has to get preference. You want to look at the IYT?
Yes, sir.
All right, and if he's chattering away in the background, that's fine. I have a grandson as well, a little one, so I can do. Now we got a break. Do you have any position in the IYT?
Yes. Well, actually, I bought like 120 contracts on the call side at a quarter. I sold half of them yesterday at 90 cents, and I still have 60 contracts. So
then we'll talk about this as soon as you get back. Okay, hold on. You just keep your grandson happy until then. I'll be right back.
Thank you.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with Joe in Fort Collins looking at IYT. The IYT is the iShares of the Transportation Index. It's an ETF, and it's called iShares DJ Transportation Average Index Fund. And, all right, so you've taken about, a third or half off already?
Yes, sir.
Okay. Now, you know, this is an interesting thing. I've just done the 120-minute chart, and okay. I've found over the last 4 or 5 months in particular that the 120-minute chart is so consistent as a swing trade, going from a buy signal to a sell signal, going to a D or an E, sometimes an F, that I have to respect that. And what happened was it went from a low of 120-minute chart, went on the 25th of October at 88.37 all the way to a peak D. That was at 92.38 at 3:30 in the afternoon on the 6th, and then it gaps down and it goes to trough E, starts a brand new buy mode, and what does it do? It goes all the way to an E, and then it spikes up to an F, and then it comes down sharply to the 200-period moving average, starts a brand new buy signal to A, B, C, D, and now it's gone yesterday at 11:30 at 93.18. Everything about this is it might pull back, but it should hold really well somewhere around with a support at 91.11. But if you have options, a 1-point move you will see the premium it'll just take the premium away very quickly. This is my thinking right now. At the risk of missing out on some statement that's made today that spikes everything to the sky, I'm going to make the suggestion that you take some more off. Here's my thinking. I know you're a little pressed for time, although you have the time. You don't have the time because you're also babysitting, right?
Yes.
So and you don't want to be doing two things at the same time. So I'm going to suggest you've had a fantastic move with fabulous profits. I'm going to suggest that you take some more of those profits off. You keep something there as a core, because even if they went to zero, they will not take away your profits because you've had such good gains. I wouldn't let them go to zero, but I'm just saying, even if it did. My thinking is this. Tomorrow, I don't know if you're able to call me tomorrow, but tomorrow at about this time, that'll be a perfect moment to see whether 92.30 is holding as support on the 9 EMA, because if it isn't, then what you're doing is you're looking at a great opportunity because you've taken maybe 2/3 of your gains. And then you could quite easily say, okay, I'm not going to rush into this because there should be a pullback of time and price based on the 120-minute chart. And that says that the candle of at 11:30 on the 10th with a low of 91.31, that's at $1.31, is going to be really key, because if it can hold that and then bounce, or if I'm completely wrong and it takes out yesterday's high of 93.18. See, if it takes out 93.18, what you have left, taking your profits now on a good chunk, what you have left will actually make up the stop that you would have put in. Do you know what I'm saying?
Yes,
on the
I do.
downside.
Yes,
Not only that, if it's really successful, great. So only 1/3 of your position is going to make you another 1.5 to 2 points. Fantastic, right?
Yes, sir.
So, and you are dealing with options. From the way you explained it to me, I don't even have to tell you. You know very well, as I do, how quickly premiums can dissipate.
Oh, yeah.
So I'm going to suggest that you take right now, where it's holding so well at 92.81 on the IYT. I'm going to suggest you can think about it. You don't have to rush into it. But my thinking is that you should take something off, leave whatever you feel very comfortable with, not as a gamble, but as a sense of the daily is still so strong in leg B, and I have to call it B because it made a lower low. This is a brand new move, and it should go to a C and a D. Now, will it? I don't know, but it should take out 93.18. If that's the high for the day, it should take it out in the next couple of days, and it should go higher. So that's my suggestion. And then maybe tomorrow, if you have time and you're around, we can look at it again to say, where would you enter on any pullback? Where would your best risk reward be, both in time and in the premium? Okay. So, and just tell me again so I can have a look at it later on today. You've got the which ones?
I have the December 93s.
You see, there's the other thing. December 93s, we're starting to run out of time. That means it's absolutely to your advantage if they squeeze the premium up, but it's absolutely to your disadvantage if this thing drops 50 cents, you're going to see a 75-cent decline in your option, correct? Something like that.
Yep.
So, okay, so that's my thinking. Here's the other one. If you are able to, and I know that if your mind is not on this 100%, probably I shouldn't even mention it, but if you were watching it all day, if it creeps up and you still haven't done anything, towards the end of the day, I would then take off maybe half of what you would have taken off now. At least take something off to guarantee yourself if there's not a gap down tomorrow, you've made a really nice decision and beautifully planned. I have to congratulate you. I don't want to take your time now, but if you can call me maybe in a couple of days, if you don't get a chance tomorrow, I'd like to know your thinking on the entrance to your position, because that was really good, and congratulations.
Thank you very much, sir, and I will give you a call tomorrow. I don't have to babysit tomorrow, so.
Okay, great. Then I'm looking I wish I was babysitting tomorrow, but I'm not. Thank you for calling.
Thank you, Beth.
Okay, Joe, have a great day.
You too.
Let's go to Dee Dee in Bethesda, Maryland. Hi, Dee Dee, how are you? Oops. Dee Dee, you there? Oh, are you there? Maybe you're listening on your computer, so there's a delay. Dee Dee? Yes.
Yeah.
No.
Would you please help me to look at the stock at DSW?
So that's the shoe store, right?
Yes.
Okay, now, let me just double check. I had all these notated. I don't want to make any excuses here. Let's see if I've still got it on this. No, I've lost all the notations. All right, let's see. What's the time? Oh, okay. I'm going to do this. First of all, do you have a position in it?
Yes, I did. And
from your voice, it tells me that you're long.
Yeah, I long is a high price at 68 something, 68, 66.
Okay, I need to speak to you about the stock because something's going on here. That gap is going to be filled. DSW, we're looking at it, 64.86. This is what I'm going to do. I'm not even going to, right at this moment, bother until we have a break. I'm going to keep you on. We've got a break coming up. I'm just going to tell you that from the way it's acting, let me just jump to the 120-minute chart here. From the way it's acting, 64.38 is really important. That's what I call the 200-period moving average. It's the exponential moving average. If it goes underneath that, it could go quite a bit lower. So, in the next 2-3 minutes, I suspect that I'm going to just take my time here because it could bounce a tad at this particular point. My bias right now is for you to take off some of your position. Did you have an idea of a stop, or did you just buy it and then you were going to think of the stop that you would put in?
Yeah, I'm thinking to stop it because this is like below 50 days. I was thinking to stop it.
Okay. So then let's do this. It's at 64.80. It's down 69 cents. I suspect that at least a part of your position you should take off right now. Why? Because there is a risk that if it's not really conforming all that much to the market, but if the market was to start turning down, even if it had a little bit of strength, I'm not sure it's going to go very much higher, but it could go to 66.47. That's the resistance. You're in at 68, so you're down about 8% right now.
Yeah.
8%. You've been in the market for quite a while, right?
Yeah.
And so my thinking is, it's really not the end of the world if you take off half of your position and you put a stop. I would put a stop at about 64.40 at this particular point. But I'm going to do this. I would like to do this on a white. Are you able to see my charts in the Tiger TV?
Yes.
Are you seeing them right now or not?
Wait a minute. I didn't see it right now.
Oh, you haven't? Okay. Well, you know what I'm going to do? I'm just quickly going to notate. I'm putting in the ChapmanWave notation right on here as we're speaking. And that's the monthly chart, because my monthly chart says that there's a really good chance that this stock and a lot of stocks in the same category, I just need to finish this A. So that's going to be an E, F/C, F/B, and G/C. Okay, I needed to know where I am in the wave count in the monthly chart, but most important right now is the weekly chart. So I'm going to do this. I want to take just a moment because I don't want to tell you to get out of a stock. Your idea was that it was going to go higher. What's happened is it's actually turned around on you and it's gone down. Your stop that you might have wanted to put in 94, so 54. Wow, it just keeps going, huh? Needed 63. Oh my goodness. Okay, so that is. Okay, finally, we've got an A, we've got a B, we've got a C and a D. Okay, I'm very comfortable in saying to you, see, I didn't want to just jump to it and have you get out of the stock, take a bit of a loss, and then all of a sudden, in the next 2 days, you suddenly see this pop back up. Well, there was a reason why it popped up the other day, right?
Yes.
I'm not sure what it was. Was it earnings? Was it good earnings? I think it was good earnings.
It seemed like, somebody look at the chart and they say have a proof back or something. Is it supposed to do good if you can get into the 68 something?
Okay. All right. So
it kept coming down.
Yeah, okay. I've got my homework done. I've done everything on the weekly and the monthly, and that to me is critical. Why? Because there are a lot of stocks that have had fantastic moves over the last 2-3 years. This is one of them. This is a great stock. That's the reason why money managers they'll go towards the stock when they're looking for something to do because it's been such a big winner. Here's my concern. My concern is that on the daily chart and the weekly chart, I'm starting to see technical signs that say, yeah, it could go a little higher, but it's in the area that says if it was to take out, if it goes to 63.50 or 62.50, for me that's it. It's done. It's going to be going down towards the 57 level, and then it could go sideways and bounce around, but it doesn't mean it's going to make a new high. So I'm going to do this. Didi, what I would like to do is to say to you, take off at least half the position, and then put a stop in on the rest of your position. Now, this is a tough one because the line I'm looking at is 64.36.
Okay.
If it closes under 64.36, I actually think it's going to go down to the 62.50 to the 62 area, and it'll do that quite quickly.
Oh my!
And that means you're going to take an 8% loss and turn it into a 10 or even maybe a 12% loss. That's not good.
Yeah. Thank you.
Okay, but the other thing is I can tell from your voice and from what you've been in the stock market for a while. You will make up 8%, even 10%, quite quickly. But if it goes to 15%, that's really tough because I tell you what's going to happen. You won't get out of DSW. You're just going to sit there saying, oh, it's got to get back, it's got to get back. And that's going to mess with your thinking. And then you won't be able to trade anything else. You know what I'm saying?
Yeah.
It's a psychological, it sits there like a big weight on your head, saying, oh, it was stupid. Why didn't I get out at 64.71? Now it's 63.71. Oh, why didn't I get out of 63.71? It's 62.71. You know what I'm saying?
Yeah.
So at least a half of your position. Take off some, and the other one, you could put a stop in 64.20 or 63.80, but at least a half, say 8% risk, I'm done. The other half, 9% risk, I'm done. And altogether, you got yourself, you will make that money up quickly. But if you stay with a stock and it keeps going down, this is a stock, if it makes what I call a hat trick top, that means the daily, the weekly, and the monthly are in sell signals, because in January, look in the shoe store, after Christmas, after the holidays, they should have a weak January. That's my thinking, right?
Oh, you're right.
So if January is going to be weak, what if it starts to go down to $60.59? Then all of a sudden what I'm looking at is my monthly chart says, be careful. And at the same time, I don't want you just to rush and get out of everything, because it could turn by the end of the day. So at least a half, give yourself a stop, name the price that you want to say. If it goes here, I'm out. And if the other half goes here, I'm out. Because you might have a half position, and tomorrow at this time, it's at 66.45. And then you say, oh, I got out of the thing and I wouldn't get stopped out. So take off a little bit now, and then put a stop on the other. Is that clear?
Yeah, it's very clear. But the problem is, when they go down, very light volume. I would say light volume, very light.
Then hold on. All right, let's talk about the volume. All right, hold on. We'll talk about that. I'll talk to you about the volume, how I see it. Okay? Hold on.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back. Dow's up 11. S&P is up 291. And we are on with Didi. And we're looking at a trade that Didi put on in DSW. Now, DSW is they have a fantastic variety of shoes. I'm not a big shopper or anything, but I've been there enough times to know that they have a great selection. And they've been a fantastic company, just a great company. Held the 9-period moving average in the monthly chart. So the monthly chart, I just have to say, there is a possibility, a strong possibility, that it's making a pretty decent top here. Now, the candle, I did a little work during the break, so that gave me a chance to look a little deeply into this. The candle that was formed last week in the weekly chart had a high of 72. I only just saw that. 72 round number high. That to me is a clue that you got to be a bit careful here. That's the way I use round numbers. That's number one. Number two is the body of the candle of last week between 68.17 and 67.06. So let's call it the 67 to 68 area, and right now it's at 64.80. That could very well be tested in the next week or so if it doesn't pull back too far, and then it'll continue going down. That's the way I'm looking at it. That's why I'm saying maybe take something off right now, put a stop a little lower down, just in case there is a bounce. And if there's a strong bounce, then what I'm going to suggest to you is to raise the stop on the second half. You might not make all your money back, but you might be able to. I could be wrong, and this thing starts moving up tomorrow. I've got a mid-channel trend line that I've drawn in that says right here, if this thing takes out 60, if it goes to at 64.81, if it goes to 63.80, there's a very good chance that it's going to get very close to the gap up high of 62.56. That's a big percentage, you know what I'm saying?
Yeah.
So I always look at it this way. If you've been in the market a while, you understand how slowly you can make up money, and 10% to make up is just, it's not easy, but it's not hard to do. But when it gets to 14, 15%, it's psychologically debilitating. It's not good. I'm just going to recommend, think of tight stops at this particular point. First on the one position, on half of your position, and then the other half position, I would still have some kind of a stop. Because, look, it's gone lower than you thought, right?
Yes.
Now, the other thing is, the next time you buy any position, especially if you're listening to some commentator saying, hey, this is a great buy it here, that's fine. You can do that. But I'm also going to suggest immediately you say to yourself, how much am I prepared to lose? Not how much can I gain? We all know to gain is fantastic. It's how much am I prepared to lose? And if you say, I'm not prepared to lose more than, I like to go in points, sometimes it's percentages, but sometimes it's points. If you say, I'm buying at 68 and I'm not prepared to lose more than 2 points, then 66, you're out. That's the way it is. So promise yourself the next time you buy, you don't press buy until you know exactly where you're going to get out on the downside.
Thank you.
That's the best thing. So good luck on the trade, and let's see how it goes. But DSW, my eye says this thing's going to go quite a bit lower. You've got to be careful. Protect your capital. So thanks so much for calling, Didi. I hope I helped you.
Thank you so much. Thank you so much. You have a wonderful day. Thanks.
You too. Thank you very much. And I've got a CD you might be interested in checking out. It's on the front page of TFNN. It's got a whole bunch of details just on chart patterns like this. Now, the candle I was looking at, that's not discussed in the CD. That's in my seminars that I give. But it's that candle from last week, besides which there was look at this, there's a silent doji on the week of the 30th of November. And then there's this wide, long-legged doji which says you can pull back. There's a chance you might just touch the candle, but then you're going to go back down. You've got to be very careful. So, looking at that, so Basil Chapman sitting in. It's me. I'm Basil Chapman. This is the end of the show. Thank you for calling, Didi. And I will be back tomorrow. Thursday. Check out the front page for my CD. What a bargain! You get my CD introducing the ChapmanWave methodology. You also, if you can give to Tiger Dollars. You can get benefits from that, and you get my opening call for a month.